Welcome back. The South African Parliament is currently hosting public hearings for the Tobacco Products and Electronic Delivery Systems Control Bill, which aims to tighten regulations on cigarettes and nicotine-containing products like vapes. British American Tobacco believes the bill will collapse the industry and heighten the illicit market. And joining me to provide further insights is Johnny Moloto, Head of Corporate and Regulatory Affairs at BATSA. Thank you so much for your time, Johnny. Now, BAT has always operated under a tough and constantly evolving regulatory landscape. So bringing in a new category or smoking alternatives, did BAT prepare the business for the regulatory scrutiny that would be coming its way?
Yeah. No, thank you very much for that question, and thanks for the opportunity to share our thoughts on this. So in 2020, we adopted a new purpose from a group perspective, to build a better tomorrow. And we later on, came up with our vision 2 years ago around building a smokeless world, which simply means that we are trying to reduce the impact of our business at different levels. So for consumers, to migrate them or encourage them to migrate from cigarettes to smokeless alternatives, to offer them still the same enjoyable products, but minus the harms that are associated with our traditional combustible cigarettes. And for society also to reduce the health impact of our business by reducing the environmental impacts, which means that we're introducing more circularity, making sure that we introduce products in market that are recyclable, so that we can eliminate the waste that goes into industry. So these are all the kind of propositions that we had adopted, which is not just consistent with what is now we are hoping to see this bill address, which we feel it doesn't address, but we think this is where the world is going towards.
Yeah. So just, on a regulatory level, there's this Tobacco Products and Electronic Delivery Systems Control Bill, which of course is under consideration currently with public hearings taking place. So under the draft legislation, then, what are the main sticking points that have been presented that BAT is in disagreement with?
Yeah, so the first one where you started, maybe that's a good point to move from there, is that in the first instance, as an industry, we recognize that there are new products that have entered the market that provide better opportunities to also contribute towards what we hope government is seeking to do, which is reducing smoking prevalence. And with that, we are saying the bill in the first instance doesn't ensure differentiation. Differentiation would simply recognize that your combustible traditional cigarettes are on the higher risk side of the risk continuum spectrum, whereas these new categories offer a risk-reduced opportunity for government to be able, if you do both in tandem, while you reduce on the one side, and then on the other side, you may be helping those smokers who would otherwise not quit or struggle to quit by offering them reduced risk products. That's number one. We're calling for differentiation to recognize this. Otherwise, you will not regulate the full spectrum of the products that are there and regulate them according to their risk profile. Number two is around, if you look at your traditional cigarettes that you're trying to regulate, what we are seeing in the bill as a concern for us is that, firstly, it does also recognize that there's a huge market that is currently sitting in the illicit space at around 75%, limiting the scope of government to only regulate 25% of a compliant market. So that is a concern to us, that because regulations are not meant for some players, but regulations are intended to regulate the entire market. So we're calling on government to say that regulate the entire market, and before you can do that, you need to tackle the problem of illicit trade, because if you do not do that, you will not capture the full spectrum of the market. But beyond that, we are also concerned about issues such as your plain packaging, which we have seen that it can further fuel illicit trade, because already the non-compliant players will simply just continue trading the way they've always done, coming clean with clean branded packs, while the legal market will comply with packs that have no, branding on them, as well as retail display bans, which we think are a problem, especially for a market like South Africa, which is predominantly informal, and that will put a heavy burden on your informal traders to be able to show their products, but also will offer the consumer limited choice, especially regarding what is available there. So it will take away that control over them to make an informed decision on what they want to do or want to purchase. But finally, is the powers it allocates to the minister. We believe it goes more into ministerial overreach, which we saw in 2020 how dangerous it can be if there are no checks and balances. So we are calling on Parliament to assert their authority when it comes to having oversight, rather than leaving these powers unlimited in the hands of the minister.
Very interesting thing that you note there, Johnny, that certain elements of the bill could lead to more illicit trade. And of course, we already know that that is a very big problem on the cigarette side. But in terms of, the smoking alternatives, the vapes, the vapor products, are you already maybe seeing evidence of illicit trade coming through there? What does that landscape look like?
Well, in that space, really, we can't at this stage say that you do have an illicit problem, because they are currently unregulated, with the exception of excise being levied on these products, because we all have to pay excise now on vapor products. So we don't know the level of non-compliance at that level, because these are new products that have not yet been properly, brought into the net of regulation. So if you take the combination of regulation that could come into place with compliance with excise collections, then you'll start to have a clearer picture. But what we do know is that there are a lot of products that are not compliant with existing product standards that were approved by the SABS last year, which calls for a variety of product and quality standards. And what we see in the market, you see products that don't probably quite comply with those standards. So it will take an all of market regulation for government to do that, and for that to happen effectively, you would need to conduct a socio-economic impact assessment to be able to understand what are the other things that are happening in the market that we are heretofore not aware of. But even more importantly, I think it will be around the issue of whether government seeks to make this differentiation in the first instance, and then conduct the proper studies to be able to understand the market. So we think there are gaps. There are still a lot of gaps. We are still far away from having what would be considered at least best practice.
I mean, Johnny, this is a business news channel, so we always want to get to the money and capital allocation factors. And I mean, because this is a growth category for BAT, of course, we've seen in the numbers the contribution that it has on revenues and profit at this point. I'm wondering then, if the bill does become legislation as is, would there be certain shifts and maybe certain capital allocation decisions that you'd have to make in terms of your investment into this category in South Africa?
Look, let's look at business in its totality, right? Because right now, if we look at how much the market has been impacted on, remember that in South Africa, we're still quite a small player in new categories, just across their availability. Cigarettes are still very much a big part of this industry. I mean, the industry is about 37 billion, but you are losing a huge portion of that, around 27 billion, which remains non-compliant, so due to under-declarations or underpayments in terms of your excise contributions. So that is a huge impact on what the fiscus could be collecting, and only the illicit players are benefiting from this, that is the delta that they need to close first. But in terms of the new categories themselves, I mean, in terms of what they contribute across the nicotine space, they still contribute a very small portion in a market like ours. Still a growing market, but it's not nowhere near the levels where cigarettes are, which is why we think this is exactly the perfect opportunity to start with regulation that differentiates and you start to capture these categories as well into your overall regulatory environment.
All right. Well, we do have to wrap up the conversation, but thank you very much for that insightful conversation, Johnny. Really appreciate your time. That was Johnny Moloto, Head of Corporate and Regulatory Affairs at BATSA. Now, as global markets face heightened volatility and trade tensions, job security is under increasing pressure, affecting wages, workforce stability, and overall economic stability across the continent. Workers in vulnerable sectors are feeling the impact most, making the need for stronger employment protections urgent. Earlier today, I was joined by economist Dr. Johnny from the Stellenbosch Business School to explore these challenges and potential solutions. We kicked off the conversation by looking at what the concentration on women in sectors most affected by tariffs is and how this impacts them differently in the South African economy. Let's take a look.
The first thing you need to look at is the export-oriented sectors. So the export sectors that have a high concentration of women in those subsectors, you know that agriculture in the main, informality with the labor force survey shows us that there is a high concentration of women within the informal sectors. And particularly why agriculture as a subsector is because of the high composition of agriculture in our economy, but also because of the high incidence of women, particularly in the seasonal work, in the informal work, in the picking, and in the different subsectors, the citrus fruit growing, the nuts. And you'll also find that in manufacturing, that's the second, probably one of the sectors that'll be hardest hit. Your minerals exports will be hard hit, titanium, your platinum group metals, and across the board, you'll find that there are, I would say, multiply effects on the supply side, on the value chain of SMMEs and companies that are producers that supply inputs into these subsectors. So your logistics that supply, whether it's trucking or whether it's movement of these goods and services, the storage facilities, these are the warehouses along the value chain of all these subsectors will be affected. Inputs that go into these are fuel. So your oil and gas industries will be directly affected because they're complementary to all these subsectors. So I think if you look carefully at the direct impact, you'll find that there's export-oriented sectors that are in the minerals, that are in the agriculture, that are in auto, particularly auto sector in the manufacturing. But all of these are high concentration of exported goods to the US markets, to the global north, which is the European markets, and also China. But we will feel the hardest hit in terms of the increase in prices from these tariffs in these subsectors.
I mean, it's quite interesting that you highlight also the informal area of that labor landscape, because a lot of the time we just tend to assess the formal sector, not actually go into the informal areas of the ecosystem. You talk about a concept, a very interesting concept of casualization of work in Africa. Just drill into that concept for me, and if then this will exacerbate that issue.
So where does it come from? Casualization of work is not just a concept that is a casual term. It actually emanates from an issue of the type of policies that we have embarked on to do what we call ease of doing business, or to make labor markets more flexible, or to what we call rigidity and reduce the rigidity of the labor market. What that basically means is let's ease up business, let's ease up the manner in which business is done, let's reduce the constraints, and businesses call it red tape. But what it actually amounts to is the casualization of work. What does this mean? It means that contractual work for and permanent work for employees is reduced. It means that the prohibitions, or what you call regulatory frameworks to dismissals, is made more lax, is made less rigid. The conditionality around terminations. You also find that benefits such as maternity, paternal benefits for fathers, care work, all of these issues, pensions that are normally attributed to not just your type of work, but permanent work is reduced because now firms are going towards contractual work, shorter term periods, and even outsourcing key components of work that would be employer-employee relationships to third parties through labor broking. This casualizes work. This reduces benefits for workers. This makes them more vulnerable. And the labor market regulatory framework that has been liberalized as a result of actually decreasing productivity. It has adverse outcomes from a social cohesion perspective, and actually it widens inequality because surpluses that are garnered through profits, but also through increased revenue generation are not shared to the working class, but they're concentrated in the top one or the top elite, which is your execs and directors and so forth, shareholders, at the expense of maybe the productive working force. And that has a direct effect on the quality of livelihoods of the majority. So I think you've got to look at the systems to adequately compensate everyone, and to look at trying to reduce that Gini coefficient, but also the median worker and the top income decile workers, that median and that difference in inequality has to be minimized, not at the expense of productivity, but for the sake of actually enhancing productivity. And I think we need a rewiring of our mindsets, because we seem to think that this is beneficial, but the evidence that we are seeing is that this actually is not good for growth.
That was Dr. Johnny Moloto, economist from Stellenbosch Business School.